Ladies and gentlemen, good afternoon, and what a time we are living through. I think every single day there's something happening in the geopolitical scene which seems to be influencing our investments and influencing our lives in many ways. We're very privileged today to have with us someone who's at the absolute front bench of what's happening globally. Swaroop, very kind of you to give us time, and welcome to this session of Navigate with HSBC.
Sheval, thank you so much. It's the other way around. I should be thanking you for giving this opportunity. It's actually very brave of us to be doing this at these times in the world. So let's hope that we have a meaningful discussion.
As the CEO of Mirai Asset Management and your entity's global exposure into what's happening around the world, I think you will have, of course, a very interesting view of global geopolitics. And then, given the topicality of that, I'll start by getting a bit of a sense of what do you make of all that's happening globally, all of these geopolitical tensions, the sense of mistrust amongst large powers. What's your broad sense of this?
No, I think we are in the midst of history, and we are in the midst of structural decadal change, if I were to put it very mildly, because when the largest economy of the world changes its behavior, the rest of the world also will change its behavior. When you look at that from a perspective of the two, I call them currencies because the world used to trade in dollars, and of course, oil being a very important part of all economies, both will now change structure and behavior globally. I mean, in my 30 years of tracking this, the dollar, because in 2008, the great Warren Buffett had simplified it by saying that the world will trade in dollars. So I had kind of rested that. But when you look at 30 years of tracking it, this is the first time sovereign reserve of gold is more than dollars. And that's not something which is now, and I feel it is now structural. And secondly, with the behavior or people now taking down the reliance on oil. I just spent 15 days in China, and I didn't see a single petrol or diesel vehicle in the entire country. And when you have that kind of consumptions now going out of oil, that will also take a meaningful sort of change. A lot of what is happening in the world is behind these two, is also the truth. So the implications will be far-reaching, and at this moment, every country is trying to find a new partner because the reliable is become unreliable, and the erstwhile unreliable is turning out to be reliable. It's fantastic to sort of see it with a lens from the outside. Luckily, we Indians are sitting in a very isolated world. I just hope people don't fire from our shoulders.
Sort of interesting candid as you always are. Uncertainty, of course, is very high, and people are choosing new alliances, looking for new friends in the world economy. Talk to us a bit about the resilience of the US economy vis-a-vis what's happening, for example, in Europe and China. What's the context of these two? And obviously, how do you see this, especially as someone from India who's looking at it outside in?
Irrespective of the geopolitical nature of the world right now, I think the world clearly from our perspective or the capital market perspective is divided into two parts, AI, non-AI. Clearly the AI countries and today some Korean colleagues are here, they're rejoicing their market being up yet again. And we're looking at 100% return from broad Korean market last year because they are the largest semiconductor providers to the world. And of course, when you look at US, the close pocket of AI companies have now just taken that entire market to a different perspective. We, not being very AI driven, are probably left out. So that's where it is standing. Politics on one side, but the world clearly seems divided on AI versus non-AI, and rightfully so, because the impact is large. And countries who are lagging behind are also showing up in their, what can I say, in the market performance. But at a bottom line of every economy, when you look at the macros of all countries, the macros are definitely changing. clearly the US demonstration at a 4% unemployment is very encouraging to see. I mean, they are recognizing that the unemployment is 4% and they need to do something about it. Please put India's unemployment at 9% and see whether we are actually reacting or not. Let's call it out there. They are taking steps to really build some of the gaps that were missing, bringing manufacturing back, which used to be completely currently is dominated by China. And from their perspective, they seem to be doing the right thing for their country at the end of the day. And now one can debate on the means or the ways, but that's their way. Who am I to comment? Right? And
Indeed.
that's had its impact on the rest of the world. It's a time to observe this, and every day, and currently with the world meet going on, every person seems to be having a view, and I think one should see the Canadian Prime Minister's speech. It was very encouraging. I mean, very interesting to hear that side of the world speaking out. So as more and more countries start speaking out, it will be then be possible to form a conclusion or any direction to which way this is headed. At this moment, I will leave it at saying that it's in the negotiation phase. All countries negotiating with each other.
Indeed, Swaroop, I think the discussion on Davos, I think we'll keep for some other conversation.
Yeah.
But you spoke about AI and you spoke about how the world is now divided into AI countries and non-AI economies. So I think watching something and it seemed to be suggesting that US is investing about $500 billion in AI, China about
Yes.
$150 billion.
True.
And the next 5 or 6 countries are in double digits, actually, which includes India as well. So when you look at the impact of AI, I'm sure this has been spoken many a time, so you would have been asked this question many a time, but what is the real impact of AI? There are many views which seem to suggest that AI is tapering down. It's an overhyped idea. What's your sense? Also, I think from an investor point of view, and because you're an investment manager yourself, how do you see this playing out over the coming, let's say, 12 to 18 months?
There is no doubt or debate in any of our minds that AI will play a stellar part in each sort of business. I think when you go back to the early 2000, I'll take a leaf out of when tech started. People thought that, how much will tech impact? And one particular fund took a bank as in its portfolio, and my portfolio didn't have bank, and I was telling, how can you take a bank in a tech portfolio? And the question asked by that fund house was, did you go to the bank to open your account? Right. And then that note also said that how banks will become tech plays. Clearly, in our business, from understanding a customer, from its series of emails of communication that they make, the sensitivity of a customer, to, of course, learning about different trends in the market, AI will not only impact all of us, will be very deep rooted in that. Let's face it, the days of analysis are over. It's a fetch word. When you use your Google Maps, you don't then question which route it takes. You have given a question, there is an answer. And that basic thing will apply to everything in every business. The quicker one uses it, the better it is. Why business in your normal life? Right. So when you look at that, and clearly, I mean, it's really stellar, and that speaks of US as an economy. Their fearlessness in investing in businesses just shows the gap between them and the rest of the world. We are not sure of what the Chinese data is because they are always very guarded about data, and post-COVID, they've become opaque about their data. That's their strategy. So one does not know how much they have invested. But clearly, there is a huge gap between them and the rest of the world, meaning US and the rest of the world. And then maybe other economies have the money, but I do not know why those large guys have not invested that much, giving US that huge edge at this moment. I don't believe it's a fad at all. I believe that, people who are probably who have not participated in it are more talking about it because of the omission. I mean, in our basic lives, we are already seeing how it can impact all of us. So I don't agree to the fact that it's a fad at all.
Interesting. And Swaroop, it's not just AI companies, but it's going to be AI enablement
Correct.
within a large set of things that
Yes.
really is going to be the differential, right?
Yes, 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 absolutely. I mean, the other day we were discussing a small fact. Suppose the agent is supposed to read a prescription and then give an advice on it for the doctor through the AI agent. The prescription has to be enabled in a certain format for the agent to read it. So people who will
Right.
convert that format are the enablers. So it's
Interesting.
just not about that front end which you see. There's a huge back end, and then like you have auto and ancillaries, you will have an AI ancillary also. Building the broad ecosystem is also my opinion.
Very, very interesting, Swaroop. Swaroop, as an investment manager, when you look at global macros, tell us a bit about how they are shaping up. Of course, US being what US is, but China, Europe, of course, are other elements that are playing out, emerging markets playing out. So give us a bit of a sense of the global macros and how you see them playing out over the coming near to midterm.
I think the global macros are very interesting as we speak. And I think the macros are in a pathfinding process because of the change in behavior. Now, when you look at US has practically identified its problems and are trying to go about mending it. When you look at China, China does have its own issues of growing unemployment and, of course, some amount of trade balance as we speak. Uh, uh, when you look at Korea, a market which was dead for 5, 6 years, suddenly roared back in 1 year. But even a country which has roared back in 1 year will grow at 2%. So the global norm of growth now is between 2.5%. And that's something if it grows at, please understand, these are also large bases. What
Right.
has happened globally, and which is credit to all these economies, is at a lower level, the per capita also they have increased substantially. Most of these emerging or developed countries, I mean, when you look at their per capita, they have not only earned money at a broad balance sheet level, but they've ensured that at a lowest level, that has percolated to people. Now, when you look at China in particular, their upliftment of the poor is probably the largest that has happened in the history of mankind. It's the only country where the rich and poor data is actually converging. In the rest of the world, is diverging. So,
Divergent.
when you look at the top two economies, there are stories to be learned from both of them. The European market is where the interesting part is because the demography is clearly not in favor of them. Let's see how they react, and I'm watching that space very, very closely. Of course, a lot will depend on the South Asian countries, which have stepped up their pace in manufacturing. And clearly, the China plus one has gone more to Taiwan and Vietnam than it has gone to any other country. So, in this exchange or trade of different kind of data points, every country is now making a play, and that's what makes this world so fascinating at this point of time.
Indeed, indeed, Swaroop, and that kind of brings me to the entire idea of global investing. So you and I, of course, have spoken a number of times on this. You know that we've got a very high conviction on customers having a global exposure to hedge risk, to look at opportunity, and so on and so forth. But obviously, given the state of the global economies and the uncertainty around it. Um, we are getting asked questions on by our customers on whether global investing is still a good idea. Should we wait for a while? So Roop, I mean, to put it absolutely point blank upon you, should we continue to invest globally? If yes, then what are the things that you think are of interest now?
I think before coming to global investing, some basic thoughts on investing, right? The first one is, when you look at, and this is true any fund manager to a normal investor, in volatility will always lie the opportunity. That's point number one. Otherwise, if it were one way, the opportunities are not there. So whenever environment is volatile, investors should know that that is when things get pretty exciting, both ways. Right, that's point number one. Point number two is markets, economies, behavior of other people is never under our control. What is under our control is allocation, right?
Right.
There is a risk of owning, there is a risk of not owning as well. The risk of not owning such economies, such businesses, such incredibly large players is very large. And that's the bottom line. Yes, one can catch if one can catch trends or cycles through one own self, one should do it. But I would say because of the dynamic nature of the market, this is not something one should attempt to do on its own. I mean, not because I'm being absolutely honest, not because we are doing this call with you or the name HSBC is involved and I'm sort of sitting here, but this is the time to fall back on people like you who have this global ability to get information across the world and put it in front of individuals. This is that time. This is not a time to for people within whatever I will call an Indian and a limited knowledge perspective, because we are practically isolated from a lot of things that are happening. But it's people who can get in that outside in view and give it in a very neutral, unemotional manner are people who will make the play at this moment. But
So
not owning is not a question at all.
I
Is
think that
people,
that phrase that you used of the risk of not owning, I think that's
yes,
very interesting. Sorry, please
yes.
continue, Varun.
I mean, when you look at, I mean, now there's no point investing in Korea now. It's done, right?
Hmm.
It's like talking about silver today. We should have talked silver 2 years ago, right? But somebody who would have invested earlier, let me, because it's a very interesting conversation. Korean markets didn't run. The average Korean is invested more outside Korea than in Korea. Suddenly, they're
Okay.
ruining the fact that they didn't own Korea much. But people who sat in Korea, the global monies, are making more money than the retail Korean at this moment. Now, the best way to do is to follow the money. And the FIs seem to be knowing it far better than the average investor. The easiest way is to do is to follow the money. Where is the money headed? And own them if you want to make tactical calls. But if you want to make structural calls, it is not right not to own such large economies and such large futuristic businesses in your portfolio. That is a no go at all. I mean, when something will run and something will not run, if I had that expertise, trust me, I won't be a salaried individual. That is not in my control. My control is my allocation, and not owning such economies is actually will go against my portfolio. Is what I firmly believe.
So sort of what you're saying, if I could paraphrase, investing in global economies as an opportunity is a given. You must do it,
You must
right?
see that's just
Two,
from an investment perspective.
correct.
Okay,
Yes,
but
yes,
from a need perspective, there are enough Indians who are now creating global liabilities
right.
due to their reach, their business, say just for education fees, right? As simple as that. If there are global liabilities in a particular currency, it's prudent to own a global asset also from a need perspective. One is from an investment perspective, one is from a need perspective, and you converge the two, the answer will veer toward yes more time than no.
Very interesting. This is a very interesting point again. If we are creating global liabilities, we must also create global assets parallelly to mitigate that. I think that's a fantastic idea. I think that brings me to the conversation around gift. So we know that that has been a new, no longer new actually. That has been one of the most emerging and interesting platforms for us, Swaroop. And I know that you now have
Yeah.
got something in gift, but tell us a bit about global investing in in the context of gift and how that is enabling Indians to access global markets.
See, a gift is placed as a conduit between global markets and us. The only currency that is not acceptable in gift is the Indian rupee. Yeah, so that's the fundamental that people abroad can come to India with their currency, and we can go abroad through our currency to that currency, right? And that's the bridge that is there. So it enables all of us to then give products to both people who are outside to come in, and of course for people here to go out. and then across the market, and you recommend a portfolio, I'm aware, but we also have been there for a long time. Thankfully, we've been there for almost 2 years now, over 2 years now. We've been able to establish a fair amount of money from outside too, and build a full-fledged office in GIFT. If anybody in India were to go and see what is happening there, and you will see that thing building, and in the next 8-10 years, I would see a good global, not only a city and but an ecosystem developing very solidly. Every 6 months I go, I see another angle to that same space. But the other advantage that one has, apart from the money flow, please understand it's a single regulator. As a fund house here, we cater to, say, SEBI and RBI differently. But there, a single regulator comes with its own merits on ease of business and efficiency of business too. Right? Yes, it is at a formative stage. Some of the operations angles will fall into place. When I go back to the early days of mutual funds, we have also gone through that. But the intent is incredibly strong to provide this conduit for people abroad as well as India. And that's why it makes it so fascinating. At this moment, all of us, I think, have funds there. I think our fund is more futuristic in nature than the core bread and butter of the market. We are sitting on the right side of AI and future. That's our view. That if you go abroad, you should own businesses which you don't get in your Indian portfolio, and hence our.
So talk to us a bit about this. Since you're talking about the portfolio, talk to us a bit about what are the core themes that you're really driving through that fund.
Yeah, we are absolutely futuristic there in our portfolio. I think the portfolio is comprising mostly on artificial intelligence and technology surrounding artificial intelligence. One of the ETFs is around that. The second one is, of course, the big story of data center that's such taken in so much of money globally. And if you look at the stocks which have rallied, a lot of them have been around data center and digital infrastructure. The infrastructure of the future may not have any correlation of the digital infrastructure of the past. We're already sensing that in our normal lives. So one of the ETFs that feeds into that is also data center and digital infrastructure. The third one, very interestingly, and that's something which I'd like to talk about a little bit more. Correct me if I'm wrong, Shavel. When we were young, we were told that life was before Christ and after Christ. Suddenly we realized that life was before COVID and after COVID. But just when we got a sense of that, comes this huge life of before tariffs and after tariffs. Right. And now we are in this post-tariff regime, and it is a structural data point for all our lives, which will impact us immensely going forward. The world is changing. In that change, it was a call, very early call from our owner, Mr. Hyunju Park himself, that the world will start changing from its approach to defense. And then we formed this defense tech ETF called Shield. Incidentally, the ideation happened there, but this particular ETF has been developed from our index business in Gurgaon.
Very interesting.
And the last 6 or 8 months, this particular idea has got 6.5 billion inflow.
Oh.
Yes. So, world, this is the only country which invests in market caps. The rest of the world has moved into futuristic themes. So when you look at asset allocation, I'm pretty certain this portfolio mix is not available in anybody's portfolio. And then brings back my basic theme of allocating differently. If you want a differentiated allocation, how much to allocate is a discussion between your clients and you. We have no role in that, right? And that's the right way. It should be very portfolio centric based on the need of the client and then the risk profile of the client. But on diversification, trust me, and you can check all these products, they're available to Google. If you see the composition of these products, this particular product is extremely differentiated from what you will get elsewhere. Hence, this discussion, and we've been talking to people, and the fund has been getting inflows. It's building well, so we're quite happy with the growth so far. We took it a little slow in the beginning because we wanted the back-end operations infrastructure to be in place, and now that it's in place, we are absolutely confident of serving the market. The beauty of this is these feed into ETFs, the subjectivity completely goes out of the window. And when you look at the 5, 6 years or 10, 20 years from here, if anybody will say these are themes which will not play out, I will have a separate discussion. Actually, a no-brainer. I mean, that's the beauty of themes. This feeds into our global ETF brand called Global X. Let me give you some other interesting facts about them. Their lithium fund is in the 11th year. Okay, it's like
Oh,
Shield, which launched last year. Think about it, 11th year of lithium fund. When they launched their social media fund, Facebook was not there. I'm not talking about Facebook IP. Facebook was not there. That is how powerful ideation can become. So these are
fascinating.
fairly tested funds, and the flows there are very strong into each of these themes. It's good to participate, I would say. How much to participate is up to you. Uh, that's not
Understood.
something which I will get into.
Correct. No, it's up to investors, of course, and
True,
in our entire process is about engaging and
true.
coming to a common ground. But I think you spoke very eloquently about thematic investment and opportunity that's building up. I would want to step slightly sideways into geographical diversification, and the earlier part of our conversation was around US, Europe, and China. Talk to us a bit about the emerging economies, Swaroop. What's happening in the emerging economies? You spoke a bit about Korea and how the run has happened in the Korean markets, but talk to us a bit about other Southeast Asian economies, maybe African economies where opportunity is brewing as well, and any concerns, any views around them.
I think that is what will happen when you look at this manufacturing space now spreading out. Who captures this manufacturing spread is going to be very interesting, and it's worthwhile to watch. In that, when you look at the world, especially African countries, this is my personal opinion. I think because of their labor force and the wage bills that they have, it is possible that large monies could go in there and set up. But manufacturing is a long-term sort of thing to build on. It's not possible that somebody goes and builds a factory and one starts getting output the next year. I think from the financial side, a lot can change. From the currency side, a lot can change. Today, when you look at China making its play, and rightfully so, it has started trading more on their currency than it used to in its earlier days. So the shape of currencies are changing, and one needs to watch that. We'll have to watch where the euro plays in all these things. At the end of the day, I see a lot of advantage for Southeast Asian countries, especially Taiwan, Philippines, and Vietnam, which were hotbeds of manufacturing. And I've been a big sort of benefactors of China plus one. Though I think the China plus one is set to reverse, is my opinion. I hope I'm right, but I'd like to follow the statement of mine on a 6 monthly basis. Let's see how it reverses, because the world is now moving more towards China. Surprisingly, in just a period of 1 year, how things can change.
Yeah.
It's interesting to watch, but from a stock market or a equity allocation, I would still bet on the dollar over any other currency. A little too early to go there, is my opinion. Let me tell you, before tariffs, our prop book allocation was spread between US and India, two countries. But now it's 50, 30, 20, 50 US, 30 China, 20 India. So China has made a play, and we do believe that it's not a short-term play.
Very, very well. Since you spoke about India, I cannot help but ask you about India. We for years have talked about India as a standout economy, standout capital market, especially from a return to investor point of view.
Yeah.
Last year obviously was relatively subdued. This year, like everywhere else, it's slightly more volatile. But what's your broad view on India? Do you see the India structural story still intact? Would return and growth come back to India very, very quickly?
Yeah, two parts. I think when you look at the last 20, 30 years of India, and you compare it to any economy in the world, we've been the most consistent growth country in the world. When we look at, say, 6.5%
Right.
growth, we don't see it falling to 3%. No way, right? I can
Right.
say no
Right.
way. Very few economies can say that. On a consistency of growth, this is probably, not probably, the most consistent growing country in the world. That
Correct.
makes it a fairly decent asset on its own. The macros of India are absolutely intact, right? It's just that opportunities outside India have become better, so the monies are flowing elsewhere. From an India perspective, we've had our challenges. There has been a slowdown in consumption, but I think that has been addressed by policy making, whether it's GST or the change in remuneration in the government that will come, I think, this year. Plus, I think the taxes continue to put some money in the pocket. So the policy making has been favoring consumption to come back. The rural was an issue, but monsoons and low inflation have kept rural at bay. It's not gone negative. It's just waiting for a trigger for an upside. The revival of housing in India is probably for us one of the biggest benefits. And then when we look at banks, especially private banks and some of the new age banks, we see a lot of opportunities there too. And now, when you look at it from a fund perspective, the proverbial stock pickers market, that statement is back. And for a good stock picker, giving 60, 70 good stories is not a big issue. Yes, finally, the market will follow earnings. Now, when you look at the beginning of the year, some of the earnings, especially auto and now IT, have started surprising on the upside, but too early to talk about. So, we feel probably the second half of 2026, and this is our commentary from 2025 Jan, not now, just 25 Jan, that till that time, it is an accumulation market. Now, if somebody were to wait for data points to be good to invest, trust me, on that day, the market will not be good to invest
Mm.
when the data points take over. These are brilliant times to accumulate India. I just tweeted today that the discussion on gold and silver should have happened last year or the year before that. This year is about Indian equity. Because if you didn't perform last year and we don't see 6 months performing, it makes the story more attractive. I will stick my neck out on this one this year. I mean, I've already stuck my neck out on some part of the market, but towards the second half of the year is when you will start seeing some upside. But here's the thing: if you see that upside, the bigger monies will see it before you,
Indeed.
right?
Indeed. Mm.
And if they see it before you, then the prices that you will catch it at will be far dearer than the ones you're seeing now.
Yeah.
I've always
Mm.
believed in two things, well, that when you support the market in its bad days, the market comes back to take care of you in its good days. So
That's the
always
interesting.
always take care of the market in the market's bad days. Secondly, that holds good for a good fund manager also. If you
Indeed.
support a good fund manager during that fund manager's bad days, he or she will come back and take care of you in his or her good days. That's just simple investing, right? It's
Indeed.
always better to
Indeed.
be contrarian. From a contra perspective, because of now it will tending to 18 odd months of sideways movement. And then, so let's just go back one. If you look at the 25 years of Nifty 50, typically from 2020 onwards, if you take that till COVID, the Nifty normally doubles in 7 years, 6 to 7 years. That was the history. Now in COVID, we had this fantastic drop to 7,500, whatever, and we got this brilliant base, and hence we got a 3 year sort of money double scheme in the market. Now
Right.
today, when it is tending towards 18 months, we are probably reverting to that original mean of 7 years or 6 years money double.
Mm.
The
Mm.
Nifty. First thing is to mitigate that return expectation. And 6, 7 year money double is not a bad return, right?
Of
Second,
course.
I think one has to also keep in cognizance, that's for you and me also to also dwell upon, that the last 3 year data can be an aberration. So when we are taking decisions based on last 3 year data, it is possible that we might go wrong.
Right.
Similarly, in the future, when we were supposed to put this one bracket of the global market movements, these are aberrations. To expect 100% more from Korea or this kind of upside from US is actually asking for too much. अगर मिल जाता है तो bonus, but it's a fundamentally flawed expectation. So these aberrations should be kept separately in a normal discussion or analysis is my simple point. But to say that India is not an opportunity, I've always said this, and we've discussed it on stage many times. Not owning India is a risk.
Indeed. I think anyway we as Indians are very bullish about India, but I think what you're reaffirming is that the structural story is absolutely intact. There is really no reason to worry. We will continue to be ahead of most of the economies globally.
Yeah.
We have done that consistently. And if we move sideways, that basically means opportunities only building up. And
Yes. I mean, if I
yeah,
were an SIP investor, I would be very happy that I'm accumulating units at these prices.
indeed. And I hope all our customers who've put up SIPs, especially over the last 18 months, would
Oh,
start
this
seeing
also I
the
tweeted. A
opportunity
10% top up can change wealth creation dramatically in these phases
dramatically.
because
Yes,
of the
yes.
price that you're accumulating.
So look, stepping away a bit, I know you mentioned silver and gold, and we started off by talking about silver and gold. We now know that I think there's a lot of sovereign buying of gold that's taking
Yeah.
place, understandably given the uncertainty around. Earlier this year, I think there was a thought that I think gold is peaked out. Should we even continue? And I'm not asking your views on gold. I know you don't cover gold in that sense.
No, we cover gold. Absolutely.
So,
I'm from East. Shabal, we are both from East. Men wear gold more than women. So gold is very close to our hearts. So
so give us a bit of context of what's happening on gold, and as an investor, um, uh, do we continue to accumulate gold in some manner? Should it? I mean, we always knew that it should be part of our portfolio, but the recent past has, of course, shown that it can completely dramatically change. But yes, your
please
views.
bear with me when I say this. Okay, please, and think about what I'm saying.
Sure.
The average Indian for the last 4 or 5 generations has been the biggest systematic accumulator of gold. Every year we go out and buy gold on a certain day. On that day, because it's a commodity, the price is the highest, we have not cared. The whole
Right.
thing has been just look at the behavior, right? And I'm just talking about the behavior of all of us on this call. There will be no exception to this rule that every year we have gone and bought gold with the simple thing of accumulating it. We have not thought of price. We have not thought of wealth creation. We have thought of that commodity being a safe haven for us and creating a safety net for us. That is the purpose of gold buying, right? And then we have had this fantastic rule that we cannot sell gold.
Right.
You apply that behavior to any good asset class, you're going to make money. Now, here's my problem. Here's my catch. The behavior was something else till we Gyanis now come in with our return projection. Now, my biggest worry is that this incredible behavior demonstrated by all Indians can be destroyed by you and me. Because now we will start
Interesting.
projecting a return to it and bring a angle which was never there. That's my worry. But my humble request to everybody is to continue accumulating the way you used to. On a personal basis, I see till the time this volatility is there, and till the time we wake up to a certain gentleman talking about the world every day or tweeting about the world every day, the sovereign buying on gold will continue. So the risk reward continues to be in favor of gold, but I don't deliberately want to talk about returns about gold ever because it will destroy what is probably the best investing behavior the Indians have shown over generations. Now with us, when I've said this, reflect about your own behavior and you look at the stock markets, all time high. And trust me, whenever you've gone to buy gold, it has been expensive.
Yes.
Always. Right?
Yes.
Always. So when somebody says market is an all-time high, some of the we are called to comment on that. I said, next time will you call me again when the market is at an all-time high? In an economy which is going to double in the next 8, 10 years. Is this the high? Say there two now, suppose the Sensex is around 8,000, 80,000. There will be two people on this call. one who views the market at 80,000, one who sees India at 8 billion. You decide who you are because it's your money. Somebody who sees India as 8 billion will behave dramatically different to the person who sees it at 80,000. And I'm not a judge on that. Right? Now, in mutual funds, the reason the Indians have made money in gold is because they've held it through thick and thin. In mutual funds, the only person who's made money is the person who's lost his or her account statement. And the other data says is the person who's dead. Okay. You have to hold this market. If it is an 8 trillion economy, if you sit in the market, you make money. You make money when you don't redeem, is a reality. Now, normally, you and I are normally assessed on our purchase recommendation. Now, I request every investor to make a very simple homework. Now, you think market has hot or something has peaked out, and you either plan to book profit or you redeem. Nothing wrong with it. When you are booking profit or redeeming, just write out that price at which you are exiting and revisit the price next year or a year or two. You'll be a little sad next year. You'll be heartbroken after 5 years. Because it is going from 4 to 8, right? So
Indeed.
if you sit in the market, you make money. This is that. And we are so fortunate to witness global opportunities at this moment. We are so fortunate to be sitting in a very stable macro called India. And the commodity rally is here to stay for some time. It's the best time to allocate assets. Now, if you look at investing, especially in Europe, 80% of retirement money goes into multi-asset strategies. So as an investor, one is spoiled for choice now. You can't be at a better position than now being an investor.
So you're so lucid when you talk across asset classes and the absolute fundamental of investing. It's very heartwarming to listen to you. But this is budget season, Swaroop, and I can't let go of you without talking a bit about budgets and taxation. I think I've got a question as well, which says, what are your views on budget announcements on LTCG and STCG? Well, with the touchy topics, but Swaroop, your views on these two.
No, actually, I've stopped predicting anything, quite honestly, because I'm not a lawmaker. But I don't see any reversal there, to be very honest, at this moment. But looking at the trend of last year, and I will definitely not be surprised if some more tinkering for the betterment at the lower end of the economy on taxation is done. I won't be surprised if that happens, is my opinion. But my grouse on the budget has been perpetual. We need to allocate more to healthcare and education in India. That allocation is not good enough or nowhere near. Now, if you look at China, and this is something which for all of us to see, the way they convert each live fetus to a productive individual through healthcare and education is a case study. It's already there. You just have to copy paste, right? And that's been the story of most of the nations. You have healthy people across. Europe, Scandinavian. These are extremely healthy, fit people. Why Africa? But Indians need to become better on health. Yes, some amount of awareness has come into many of us. We are wanting to be healthier. We're going to live longer. And if you're going to live longer, then you'll need a lot of money. Are this consciousness there or not? But there is one part where the budget does something for us, where there's a lot which we can do on for ourselves if we become a little conscious on that. But clearly, I see thrust on a lot of core sectors coming back. I think manufacturing will continue to get some I don't see any major money there, but I hope they do something on electricity subsidy. Because if this is a very interesting discussion I was having I have a lot of friends who are in the power sector, and industrial power unit price is the highest in the world. Right? And again, going back to China, China actually subsidized power to the manufacturers. Okay, we
Interesting.
actually give it free out to a lot of unproductive, to be politically correct, unproductive industries. They need to change that to providing that to productive. So small tweaks can do a lot of good, but my expectation on long-term capital gains is not there.
And sort
I mean,
of when
I'll
you,
take it if it comes.
yeah, of course, I'm sure everyone will take it, I guess. So, and when you look at budget and you look at the investment management stroke wealth management industry, are there any specific expectations that you have on the budget which you believe would be able to enable this industry in any manner?
No, I think two things that are happening at a structural level. See, they've done a lot of work on pension. Okay.
Right.
And please, this is I borrowed this statement from my the owner of our business called Mr. Yunju Park, and he has a very interesting observation. Worldwide, the divide between the rich and poor is growing. A good economy safeguards its average public by a good pension plan. In India, 11% of the population gets pension. 76% of that 11% work post retirement for financial needs. That's how terrible we are. So I think some of the pension reforms that are there are welcome. From a financial perspective, that's something which is beginning to happen. I do see there is talk, but I hope one day general insurance and life insurance are merged, and people are allowed to provide it across, so that will simplify thing. The need for medical insurance is still not there in the country, and
Right.
the need for medical is only growing, right? And I think what has happened in the last 4 5 years is definitely a big upside for mutual funds. We are now 16% of penetration, which is before COVID we were just 4%, right? So we are seeing a dramatic change in financialization of assets. I will only see encouragement from the powers to be on these fronts. I'm a big fan of the capital market index, and the capital market index is only broadening, and the number of players getting involved in the financial side of assets and liabilities are increasing, and that augurs well for the future of our economy. This is the backbone. Money is the backbone, and if money is then allowed to spread into different businesses, it's always good for the economy.
Interesting, Swaroop. I mean, we all will obviously wait for the 1st of Feb, and then second, when I give you a call, I'll of course want
No,
to hear from
I'm
you as
not
to what you
predicting anything because, but one thing is for sure. If you look at what started our basic encouragement to look at these kind of careers called finance, which started in the mid 80s of policy making, for 20, 30 years or 20, 25 years, whatever, it's been consistent. So policy making has been a big booster for this 6.5% growth. I don't see that slowing down at all.
Awesome. Awesome. So that's very heartening way to take you to the final part of this conversation. So we've spoken about world, we've spoken about the uncertainty around the world, we've spoken about how opportunity remains. We've spoken about the risk of not investing. I think I'm taking that
Yes.
back as a phrase. We've spoken about India, we've spoken about many topics, of course, budget being the most recent one. But if I were to request you to share with us and our investors one or two real top line messages that they should definitely keep in mind in the context of diversification, both geographically and at an asset level. What would these two broad messages be?
See, and this data needs to be repeated every time we come on stage, right? Taking nothing away from the India story, we are still 3.5% of global market cap. 97% of the market is outside India. So it's staggering that we are not owning it if someone is not owning it, right? For a
Correct.
mutual fund investor, there are opportunities when funds are opening up. And they cater to 97% of the market of the world. So not owning it is a no-brainer, actually. I mean, there's no way you cannot not be in 97% of the pie. That's fundamental. So either you own it from the mutual fund space or through Gift City. Please own it. What to own, maybe, Shaval, you are the right judge. and advisor to the investor. But not owning is disservice to a portfolio. At the end of the day, it's not about. I'm not even coming back to asset allocation. It's just the quality of those businesses, and some of those businesses are so evolved that they'll take probably 20, 30 years to come to India. You'll probably not own them ever, right? So how can you miss that opportunity? This is point number one. Point number two is this in this dynamic world. While India is growing at 6.5, and we have this steady flow of money at a DI level, and when money is this market used to be owned by FIs, it used to be owned by institutions. Slowly but surely, that holding is now shifting to the retail or the individual investor. That would mean the risk of the market is also shifting to the individual investors.
Right.
So that is something which one should take cognizance of. Earlier, they used to own the risk. Now, slowly but surely. So there's two sides to every story. So when you look at the 30,000 rupees SIP story building, the risk on this side is also building. And when you start investing, you start thinking that this is a return generation process. It ultimately is a risk mitigation process. So when you mitigate the risk of your portfolio, the compulsion of owning different businesses, the compulsion of owning different asset classes, then becomes very, very persuasive at a ground level. So when you look at the next 10 years, yes, the world might look a little different. But when you look at most of these companies, they're like those kingdoms. They don't earn all their monies from one country, even if it is US. Look at the balance sheets of some of these companies. 40%, 45% of the revenues come from rest of the world. While you might think that you're owning a company which is probably listed in the US, you're owning actually a business which is spread across the world. That's something which you cannot take away from this, what they've built in this period of time, right? Even for some of our large Indian tech fund companies, a lot of the revenues come from outside, and that's how the risk is mitigated.
Right.
Even if, say, a large economy goes down, the revenues from the other side of the world can subvent that, right? So owning that business at many a times is market agnostic, such businesses, right? So I think just to conclude that one statement is that when such a large opportunity is there and you have ways of owning them, the sooner you own them, the better. Whether they'll perform next year or underperform next year is a separate issue. But when you get into owning equity or buying equity, it is about ownership. And owning those kind of companies in your portfolio, if I'm allowed to send this statement, it is actually God sent. Those companies need to be part of your ownership.
So it's simple. You have to own ideas and opportunities that are growing all around the world. It's not just about India. You have to own that opportunity.
Complements your portfolio. Absolutely complements your portfolio.
Perfect. And two, I think you make an important point that as retail investors come into the market, we must also be aware that as returns grow, risk also grows, and investors would definitely need to be aware, sensitive to that idea when they're investing. Swaroop, it has been an absolutely fascinating. I didn't realize that we've almost spent an hour talking, and there's more to ask, but absolutely fascinating. I mean, you've held you've been the mantle of the Mirai asset business for a very long time, and I think you've given it direction. And it's such a pleasure to hear from you about so many different topics. I think what really stands out, of course, is the absolute candor with which you speak. That makes it fantastic. And of course, I realize that you have not used a single technical term. You've used it. You've spoken in a manner where all of us can understand the way the world is moving. So really appreciate the time, Swaroop. Thank you for coming and talking to us on Navigate with HSBC, and to our investors who are watching this episode. This is a fascinating conversation, and hope you're taking back some of the learnings from here. And obviously, we'll be there for you whenever you need us to enable you guide through this journey. Once again, Swaroop, thank you for joining us this evening.
My absolute pleasure. Thank you so much for having me. It's always an honor to be on the HSBC stage. Thank you.
Thanks a lot, Swaroop. All the very best. Have a great weekend ahead. Thank you.